Hello investors and traders, today I'll speak about best dividend stocks to buy right now. So look, I found a nice article about dividend stocks. So of course it's really critical to be selective. It's come to buy dividend paying stocks and chasing yield, looking for the most yield rich areas of the market can often lead into troubled area and dividend traps. Companies that have a nice looking yield that is ultimately unsustainable. So look here, there is a list of top 10 dividend stocks, and today I will choose three of them. So my picks will be Verizon, I guess, Gilead, and another one. I guess one of these in the one of the last companies here. And also last time I received a comment from one guy. He told that actually the dividend yield is not so high, and it can be easy just to pick a dividend aristocrat and don't bother yourself with the research, with the stock picking. So today the dividend yield will be very dull, it will be much higher. So let's start. First company for today, Verizon, with a dividend yield more than 7%. If we look at the chart, so actually last 10 years we traded in range between 36 to 60 bucks. Now, by the way, we turned the lower range of this lower border of this range, and the momentum indicator 31 there is side telling us that the stock already oversold. Verizon, let's have a look on this company. The market cap 150 bucks, dividend yield more than 7%. It's a telecommunication sector companies. By the way, the valuation now, why I paid my attention to this company. The evaluation now is very attractive. It was 15, 12, now it's 7. The P ratio only 7. NPS also, price per revenue very cheap. It's only 1, so the evaluation of this company very cheap. The revenue continue to grow, and by the way, the marginality, it's a telecommunication sector, but marginality quite high. The gross margin 44%, net income 16. So most of the revenue company, of course, earn in the US. It's US company. Let's have a look on the Verizon company dividend history. So here we see dividend yield more than 7%, dividend increase track record 18 years, and annualized 3-year dividend grow more than 2%. By the way, the payout ratio is 50%. So here I see a nice room even for the company to continue, of course, to continue to increase the dividend payments, and when the company will reach the level of 25 years, it may become a dividend aristocrat. So in this case, I guess the company Verizon has a great probability to become a dividend aristocrat, and even to continue increasing dividend payments and pay a nice and juicy dividends to its shareholders. Let's have a look on the second stock, on the second company for today. Actually, it's the first time I am speaking about this company on my channel. So this company is Gilead Sciences with a ticker GILD. It's a healthcare company, actually a biotech company. Dividend yield very close to 4%. If we look at the chart, we're trading in a range between 60 bucks to 88. Now we are a little bit closer to the higher border, but the momentum indicator 50 it's 46, so that a little bit oversold, actually in the middle of this level, so it can be a nice point to buy this stock. Let's have a look on the fundamentals. So market cap about 100 billion bucks, dividend yield, the forward yield 3.8. This company is a biopharmaceutical company which is engaged in the research, development, and commercialization of medicines in areas of unmet medical needs. The firm's primary areas of focus include human immunodeficiency virus, acquired immunodeficiency syndrome, liver disease, and a lot of other disease. The valuation PE is 17. Actually, it's near the average for S&P 500 index companies now, and we may see that the revenue of this company for the last 5 years continue to grow. For last year, company earned more than 27 billion bucks, and the marginality also quite high. Actually, it's the same as Verizon, but the gross profit is higher. Net income is the level of 17%. Most of its revenue the company earned in US, but also the Europe 16%, and other companies about 14%. If we look at a dividend history of this company, so dividend yield 3.8%, the dividend increase track record 8 years, the annualized 3-year dividend growth is more than 5%, and the payout about 67% for this company. Also, if we look at the dividend, the financial health, the debt amount for this company in the balance sheet is decreasing. It was more than 32 billion bucks now for the last years. It 25. So I remind you that now we're living in the area of highly interest rates, highly environments, highly interest rate environment. The Fed fund rate is more than 5%, so actually it's a good sign that the management of this company is operational very healthy. So generally speaking, high dividend yield, nice valuation. Look, the P ratio here was just 1 year ago it was 30, it was 20, 23, now it's around 17. So for me, I see not expensive valuation, nice dividend history. And also if we look at the analyst expectation, analyst rating, so for the last 3 months we see strong buy 12, buy 1, and hold 17. So why not receive and hold nice juicy dividends? And of course the potential, the upside, the average is at least 16% from the current price level. So Gilead is the second stock for today. And let's move to the last company for today. It's American Electric Power Company. It's another company for this from the list of best dividend stocks from this article. So here actually I think it's the same. Look, we trade in a range, the range and the very short range between 84 bucks to 105. Now we in my mind we more close to the lower border of this range, and the momentum indicator or also 45 points for RSI. It a little bit oversold. The dividend yield here is more than 3%. Let's have a look on the parameters. Fundamental of this company: market cap 46 billion bucks, dividend yield 3.7%. This company, of course, from its name, engaged in generation, transmission, and distribution of electricity. It operates throughout the following segments: vertically integrated utilities, transmission and distribution utilities, transmission, the wholeco, and generation and marketing. The P ratio 23. It's not cheap, but it's generally near the average for the last years. NPS 2.4. By the way, the PS a little bit cheap. It's fair in my mind. The PS, the revenue, price per revenue is fairly varied, because look, the net income margin here is 12. So the marginality for the utility sector, net income margin in my mind it's not low. So it's generally it's okay. The revenue is very stable for this company, and of course the marginality also usually 12, 14%. So the utility sector by itself is very stable and very stable segment. Let's have a look on the dividends for this company. So it's the company increasing dividend payments at least for the last 7 years. Also the dividend per share is increasing. The payout now is payout ratio is 83%. And let's have a look on the projections. So we see the EPS, earning per share, is expected to grow for the future years, and the revenue also expected to show a slight growth. So nice potential for this company to grow, and I believe that the dividends per share also for this company will continue to grow and will please you with a nice and juicy dividend. So that's the three companies for today: Verizon, Gilead, and American Electric Power Company. And the dividend yields here more than 3%. The average, I guess, 4 or 5%. If you're interested in dividend investing, so of course don't forget to subscribe to my channel, press the like button, and see you on the next time. Bye.